If you're thinking of upgrading to a private condo because everyone else is doing it, stop. Don't sign that mortgage until you watch this. In this video, we'll unpack whether property progression is truly the best path to wealth, or if staying in your HDB and investing in dividend stocks might actually give you more freedom, cash flow, and peace of mind. I'll also reveal the hidden risks that most agents never talk about, and the powerful mindset shift that helped me stop comparing and start choosing what's right for me. So stick with me till the end. This video might just save you from decades of financial stress and give you a better path toward freedom. Like this video so more Singaporeans get to see it, and subscribe to Wealth for You for grounded, no-hype investing insights. Disclaimer: this video is for education and sharing only. Always do your own research or speak to a financial advisor before making major money moves. Chapter 1. The decision that could change everything. Hi everyone, this is Wealth for You, the channel where we help Singaporeans make smarter money choices without the noise. Today we're tackling a question that can literally change the trajectory of your financial life. Should you follow the asset progression dream, buying one condo after another, hoping to build wealth through leverage and capital gains? Or should you stay grounded in a fully paid HDB or modest home and channel your surplus into dividend-paying stocks, REITs, CPF/SA, and dividend ETF, building passive income, flexibility, and peace of mind? But here's the twist. This isn't just a numbers game. The real challenge? Learning how to decide what's right for you without constantly comparing your life to someone else's highlight reel. Because in Singapore, where property is almost a national obsession, it's easy to feel like you're falling behind if you're not upgrading. In this video, we'll break it all down, clearly, honestly, and without bias. You'll walk away knowing the truth behind condo investment versus dividend investing, the hidden financial traps that no one talks about, and how to build wealth your way, based on your goals, not someone else's timeline. Chapter 2. Two paths, two mindsets. Which one truly builds wealth? Let's begin by breaking down the two most common mindsets when it comes to wealth building in Singapore. Mindset A. The property progression path. This is the classic upgrade journey many Singaporeans dream of. Start with a BTO HDB flat. After the 5 to 10 year MRP, sell and upgrade to a private condo. Eventually buy a second condo for rental income. Then, in retirement, downgrade back to a smaller HDB flat to unlock your capital gains. Sounds familiar? This approach relies heavily on leverage, large bank loans, mortgage repayments, and tenants helping to cover your costs. If timed well, yes, it can generate rental income and capital appreciation. But let's be honest, it's not for everyone. It demands a high household income, at least $12,500 to qualify for a $1.5 million condo, a strong stomach for risk, and the discipline to deal with mortgage stress, rising interest rates, and potential vacancies. This path can feel like a golden escalator, but miss a step and the financial consequences can be severe. Now, Mindset B. The dividend income strategy, which is our focus. Here's the quieter, often overlooked alternative. Instead of stretching yourself to upgrade, you stay in a fully paid or modest HDB flat. Invest your monthly surplus into REITs, dividend stocks, and ETF or CPF/SA top-ups, and build a growing stream of passive income that works for you in the background. This approach isn't flashy, but it offers liquidity. Your money isn't trapped in a single property, diversification, across industries, geographies, and asset classes, and peace of mind. No 30-year mortgage tying you down. No fear when interest rates rise. It's not about keeping up, it's about staying free. Chapter 3. The hidden risks of over-leveraging. When your dream home becomes a trap. Let's be honest. Buying a $1.5 million condo in Singapore sounds like you've made it. You're living the dream. Nice address. Swimming pool downstairs. Instagram-worthy interior. But what if that dream comes with golden handcuffs? According to DBS, the bare minimum household income needed to afford a $1.5 million condo is around $12,500 a month. But in reality, the average income of actual condo owners is closer to $25,700 a month. That's double the minimum. And that's not a coincidence. It's a warning. Because here's what happens when you stretch just to level up. Half your take-home pay vanishes into mortgage payments. There's no buffer left to invest, grow your wealth, or build an emergency fund, and you can't take a sabbatical, switch careers, or even afford to fall sick without worry. One retrenchment, one interest rate spike, one family emergency, and the whole plan collapses. And that's when the truth hits. You may look successful on the outside, but inside, you're stressed, stuck, and silently struggling to keep up. That $1.5 million condo? It's not freedom. It's a cage made of marble floors and condo maintenance fees. So before upgrading just because others are doing it, ask yourself, am I moving forward or just locking myself in? Chapter 4. Stop comparing. Start choosing your own path. Here's where so many people in Singapore go wrong. They upgrade, not because they truly want to, but because everyone else seems to be doing it. Social media, is full of all those curated highlights. The rooftop condo view, the year-end Europe trip, the new Tesla with the red plates. But here's what you don't see. The sleepless nights wondering how to make the next mortgage payment. The pressure to maintain a lifestyle they can't actually afford. And the silent stress when interest rates creep up and monthly repayments jump by hundreds, or even thousands. So stop chasing someone else's version of success. Because the truth is, your life is not a race. When you constantly compare, you lose sight of your values, your goals, and your progress. So instead of asking, why does my friend already own a condo at 35? Ask yourself, am I wealthier, emotionally and financially, than I was 3 years ago? Am I building a life that gives me peace of mind, not just a fancy postal code? Am I making decisions based on what I value, not what looks good on Instagram? Because here's the truth. No one tells you. Living in a paid-up HDB flat, earning $2,000 a month in passive dividends, and having no debt and full control of your time, that's not missing out. That's not being left behind. That's winning quietly and winning smart. Chapter 5. What the data actually says. Let's move past the hype and look at the numbers. Not opinions, not marketing brochures, but long-term performance data. Over the past 30 years, Singapore private property, based on URA's Private Residential Property Index, has delivered an estimated compound annual growth rate of around 4 to 4.5%. Meanwhile, the S&P 500, which is one of the most widely followed global stock indices, returned a compound annual growth rate of about 8 to 10% in US dollars. After adjusting for currency fluctuations to Singapore dollars, the estimated long-term return still lands close to about 8.5 to 8.9%. Now, important disclaimer. These numbers depend on the exact time period and exchange rate you use, so just take them as approximations, not absolutes. But the trend is clear over the long term. Equities, especially diversified global ones, have outperformed Singapore property. Now, let's bring this home. You don't need to bet on US stocks alone. Right here in Singapore, we have stable dividend-paying giants like OCBC and DBS, which have recently offered dividend yields of 5 to 6%. These banks are profitable, well-capitalized, and benefit from higher interest rates. That's potentially $5,000 to $6,000 in dividends every year on a $100,000 investment, without needing to sell the stock. And what if you want real estate exposure without buying a $1.5 million condo? You can invest in REITs like Mapletree Logistics Trust or Capital and Integrated Commercial Trust. These give you access to industrial, retail, or business park real estate, but with lower capital, higher liquidity, and quarterly or half-yearly payouts. So, what does this all mean? When you buy property, you often rely on leverage. A 25-year mortgage, hopes for price appreciation, and a tightrope walk of rental income, maintenance, and interest rate risks. But with dividend investing, you build monthly passive income. You maintain liquidity. You can sell a portion anytime, and you can diversify across companies, industries, and even countries. And most importantly, you can start small, with $500 to $1,000 a month, not $300,000 in down payment. So yes, real estate is a tangible, proven asset class, and in some cases, it can work well. But the data shows that long-term investors who consistently invest in quality dividend stocks, REITs, and global funds can potentially come out ahead, not just in total returns, but in peace of mind, flexibility, and freedom. Chapter 6. Both have merits, but choose what fits you. Let me be very clear. Property isn't bad. It's worked well for many Singaporeans, especially those who understand real estate cycles, have the income and financial buffers to ride through downturns. Don't mind managing tenants, repairs, paperwork, and loan repayments, and are comfortable with leverage. But if you're someone who values simplicity, no need to time the market or stress over project launches, liquidity. Your money isn't locked up for 15 to 25 years. Passive income that pays you while you sleep, and peace of mind, knowing your portfolio works for you, not the other way around. Then the dividend income approach may be the smarter, calmer path forward. Start small, stay consistent, grow steady. You don't need a huge windfall to get started. With just a few $100s a month, you can buy shares of dividend stocks like DBS or OCBC, own REITs that pay you quarterly, like Mapletree Industrial Trust or Capital and Integrated Commercial Trust, or invest in global index ETFs like VWRA or the S&P 500 via platforms like FSM1 or IBKR. With consistency and reinvestment, those small dividends can snowball into a reliable stream of passive income, one that grows with you. It's not a get-rich-quick scheme, but it's a get-rich-sustainably system. The real win? It's not about owning a flashy address. It's about owning your time. The ability to take a sabbatical without fear, to support your family without selling assets, to retire on your terms, not the bank's. A paid-off HDB and $3,000 a month in dividends? That's not just comfortable. That's financial freedom in Singapore's context. So yes, both property and dividends can build wealth, but only one gives you flexibility, peace of mind, and a way to grow without getting trapped in the rat race. Choose the path that fits your temperament, your lifestyle, and your long-term goals. And if that happens to be dividend income investing, you're already on the right track. Final thoughts. Choose freedom, not comparison. So don't let flashy upgrades or Instagram-worthy condos shape your financial choices. Your life isn't a race. Your money should be a tool for freedom, not a scoreboard. Ask yourself, am I truly cash flow rich, or just asset rich on paper? Do I want a life of quiet confidence, or loud debt? Because being asset rich with a private condo sounds great, until you're stuck with massive loans and no flexibility. But being cash flow rich? That's waking up stress-free because your dividends cover your expenses. That's choosing a job because you want to, not because you have to. And remember, the only person you need to be richer than is your past self. If this video gave you clarity, help more Singaporeans make smarter money choices. Like this video, share it with a friend, subscribe to Wealth for You, and most importantly, hit the notification bell so you never miss insights that could change your financial life. Let me know in the comments. Are you aiming for condo progression, or is dividend income your path to peace of mind? Whatever you choose, Just make sure it's a life you truly want. One built on freedom, not comparison.